Dear participants, good morning, ladies and gentlemen. My name is Kalina Shukarova Savovska, and I'm a Senior Financial Management Specialist joining you from Vienna, the Center for Financial Reporting Reform. Here with me is Piotr Piziak, also a familiar face from the Audit Training of Trainers program. It is our pleasure to welcome you to this distance learning event on the new International Ethics Standards Board for Accountants standard, which is responding to non-compliance with laws and regulations, NOCLAR. This event is organized under the EU-REPARIS program and the Audit Training of Trainers activity. This distance learning event is made possible with the generous financial support of the European Union. We would also very much like to thank IFAC and the International Ethics Standards Board for Accountants for making this event possible. The new standard responding to non-compliance with laws and regulations becomes effective 15th July 2017, with earlier adoption encouraged. This standard is designed to strengthen the role of the accounting profession in the global fight against non-compliance with laws and regulations in areas such as fraud, money laundering, bribery, corruption, and violation of laws and regulations. The new standard provides a framework that guides the professionals in deciding how to best act in the public interest when they become aware of NOCLAR. This session will explain the requirements of the new standard and all its relevant aspects. We have two distinguished speakers with us today. We have Richard Fleck, who is the Deputy Chair of the International Ethics Standards Board for Accountants and is also the NOCLAR Task Force Chair. Richard is currently a consultant for Herbert Smith Freehills LLP, and he is in this role following his retirement in 2009 after serving 30 years as a partner in this UK law firm. Richard has served on many external appointments, and just to name a few, the UK Financial Reporting Council, a chair of the UK Auditing Practices Board, and a non-executive director of the National Audit Office. Also joining us today is Ken Siong, who is a technical director of the International Ethics Standards Board for Accountants. In his present role, he oversees the work of the International Ethics Standards Board for Accountants, its strategic and operational activities, and its work program. His prior role includes serving as a deputy director of the International Auditing and Assurance Standards Board, and prior to joining IFAC in 2002, he worked as a senior manager in the assurance practice of PricewaterhouseCoopers. Today, we have participants who are joining either via WebEx connections or through VC connections from the following venues: Tirana, Sarajevo, Pristina, Skopje, Podgorica, and Belgrade. We have VC connections with these locations. We also have WebEx locations with participants from Romania, Bulgaria, Estonia, and Croatia. Please, in order to have a successful session, please all sides to make sure that the microphones are turned off while they are not speaking. Participants who are joining via WebEx to make sure that the mute button is on at all time when they're not speaking. In case a connection is dropped during the session, then please redial to join if you're joining via WebEx, or please seek IT support if you are connecting via a VC connection at the WorldBank venue. Let me now pass over to Richard and to Ken, who will start today's session about the new ethical standard NOCLAR. So Richard, Ken, over to you.
Thank you very much indeed. And good morning, everyone. And thank you for taking the trouble to join us for this session. Can you hear me all right? Kalina,
yes.
Can you hear me all right?
Yes, we can hear you and we can see you. Everything is all right.
Very good. Could you go to the next slide? So that we can, could you go to the next slide, please? Thank you. The background to this project was that over a period of years, there had been a number of cause célèbre financial scandals which had adversely affected the reputation and standing of the accountancy profession, and in particular the audit profession. Those scandals included names that are now household names: Enron, WorldCom, Parmalat, Tyco. The list unfortunately goes on and on. And in each of those situations, there were facts which were known to auditors and which they did not properly evaluate. And if they did evaluate them, they didn't take action to prevent the wrongdoing that occurred. For example, in WorldCom, there were fraudulent transactions and the accounts were misstated to the knowledge of accountants, and the accountants did not take steps to draw those faults to the attention of the authorities, or otherwise take steps to expose the wrongdoing. So against that background, the IESBA concluded that it was necessary to look at the code of ethics and conclude whether or not there should be provisions that required accountants to disclose or report what actions they should take when they identified wrongdoing. If you go to the next slide, please. One of the reasons why this was necessary was that clients gave it enormous importance to the concept of confidentiality, and on the basis that they had a duty of confidentiality to clients, they concluded that there were steps that they could not take in response to discovering wrongdoing by their clients. They felt that it would be a breach of that duty of confidentiality to report or disclose the wrongdoing to third parties. The second reason why this was an issue is that accountants, in discovering that they were connected with clients who were acting improperly, unlawfully, took the route of resigning rather than disclosing matters. And so for us, we decided that it was important to look at the overall expectations under the code to see what steps could be taken by accountants to address non-disclosure of fraud and other illegal acts and breaches of regulations. Ken, is there anything you'd like to add at that particular juncture?
At this point, Richard, next please.
So against this background, we concluded after examining the position that the guidance was lacking and that there were difficult issues to address as to the respective responsibilities of auditors and professional accountants. The public at large has, I think, an expectation that auditors will play a watchdog role in relation to wrongdoing by clients, and that is a different expectation from the expectation in relation to professional accountants, where there are very different considerations, including the employment relationships that may exist. The concept of dealing with this, or the approach that had been adopted in the past, had already picked up and addressed the situation where fraud was discovered, and the conclusion was this should be extended to circumstances when there was non-compliance with laws and regulations, but not all laws and regulations, as we will see in a moment. So that was the background to the project. Those were the issues that we had identified, namely the overarching responsibility of confidentiality, preventing accountants from responding in the way that the public expected when discovering breaches of laws and regulations. And we identified the importance of differentiating between the expectations under the code for auditors as opposed to professional accountants. Again, over to you, Ken.
Nothing to add further, Richard. Next slide, Kalina.
So, the heart of the debate, as the slide says, became when should the professional accountant override the duty of confidentiality and disclose the existence or of an actual or suspected non-compliance with law and regulation to an appropriate authority. And that involved balancing the public interest with the principle of confidentiality. And in that context, it was important to discuss, and we did discuss, the disclosure of non-compliance in the context of the public interest as a whole. The actual project, and this is important, I think, to emphasize, deals with the whole process and the steps that the accountant should take from the moment the accountant identifies the possible, the actual or suspected non-compliance. And there's a sequence of events, as I will try and explain to you, that the accountant should go through to investigate the facts and matters that gave rise to concern about non-compliance with laws and regulations, and then discuss that with management, look at ways in which it could be addressed or responded to, and if the company does not respond, or if there is not a satisfactory solution to the situation, disclosure to the relevant authority. And we'll take you through that in the slides that follow. Again, Ken, over to you.
Yeah, just one point to add here, Richard, and that's an important point for participants to bear in mind. The reason why this project was so controversial and why it took so long for us to get to the final outcome was because of this very question, this very equation that the ethics board had to balance. And that is confidentiality, the duty of confidentiality under the Code of Ethics versus the duty to act in the public interest. And why it became such a challenging issue to address is because confidentiality in and of itself is in the public interest, particularly in the context of an audit of financial statements, where without confidentiality, without an understanding that there is, or the auditor is under that duty of confidentiality, clients themselves, management, those charged with governance might not be as open or as willing to provide information to the auditor as it would be otherwise. So that was the crux of the issue. Confidentiality in of itself is in the public interest, but so is disclosure of NOCLAR to an appropriate authority. Next, please.
So after a 6-year exercise of developing the standard was approved in April 2016, and it's effective from July the 15th of this year, 2017. It's important to emphasize that as far as the responsibilities of auditors are concerned, this project was undertaken in close coordination with IESBA, and that they have made some amendments to their standards in order to reflect the position that was taken by the ethics board. I should just explain the 6 years that it took to develop this particular standard. We started with an exposure draft, which took a tougher line in relation to the obligation to disclose breaches of law and regulation to authorities. It actually required auditors to make that disclosure, and this was very controversial. And as a result of that controversy, there were 3 round tables held in Asia, in Europe, and in North America, at which significant stakeholders participated in a debate to try and work out what was the right balance to find between, as Ken has just described, the duty of confidentiality and disclosure in the public interest. And those round tables were extremely useful, and they led to the structure of the standard as we now have it. Ken.
Maybe just point of information for participants. The first exposure draft, as you put it, Richard, really challenged thinking in terms of how accountants, auditors should respond to issues of NOCLAR. And what the board proposed in the first exposure draft was a requirement for auditors in particular to make disclosure to public authorities upon identifying significant issues of non-compliance with laws and regulations. That proposal met with a significant pushback from stakeholders across the board, whether they be regulators or investors, whether they be participants from the profession, whether they be audit committee representatives. Many of our stakeholders recognize the challenge of implementing a requirement to disclose, particularly for auditors. And just to give you some reasons why they felt this was going to be very difficult to implement. First of all, some really challenged whether a requirement to disclose would compel auditors to breach legal confidentiality laws, legal confidentiality provisions in their jurisdictions. In many jurisdictions, in fact, there are laws and regulations that really enshrine this concept of confidentiality, and there was that real fear that auditors would be pushed to breach laws and regulations in order to meet the requirement of the standard. Secondly, there was concern about exposure to negligence actions, whether auditors actually make a report or whether they in fact do not make a report. If they were to make a report and the report were to be found to be unfounded, they would expose themselves to negligence actions from the clients. If they were not to report, and indeed the NOCLAR were found to be real, and stakeholders actually suffered losses, they would also be exposed to negligence actions. So there was a fear that either way auditors would lose. There was also a concern about the impact on the client relationship and what a requirement to disclose would have on that client relationship. Would disclosure in fact lead to clients no longer being as willing to make information available? Would management no longer be willing to speak up or speak out in interacting with auditors? And there was also a real fear about retaliation from the clients or others who would be impacted by the disclosure, particularly if they had any sort of involvement in the NOCLAR itself. So a number of very understandable concerns that our board had to take into account in figuring out another way to approach the issue. Next slide, Kalina.
Thank you for that, Ken. So the main objective of the project became how to guide professional accountants through the thought process as they encountered areas of concern, the steps they should take, and how they should progressively be led, if that's the right way to put it, to examine and understand the implications of the decisions they were making, and ultimately conclude whether they should be reporting anything at the prospective breaches of law or regulation in the public interest, and how or who they should report to. So what I want to emphasize is this isn't just a provision. Note that this particular section of the code isn't just a requirement to go and talk to the appropriate authority when you encounter a breach or a prospective breach, suspected breach of law or regulation. It's a framework, a sequence of actions that's designed to help the accountant think through the correct way of handling the situation, who to talk to, what to expect, what to attach importance to, and how then to respond in the light of the analysis that's been undertaken. Ken.
Just a point to add, Richard, and I think we cannot overemphasize this very important objective that our board try to achieve, and that is to provide that framework or a set of guiding principles or guidance as well to auditors and other accountants. And really the point that our board really took to heart is that in many of these situations of NOCLAR, the accountant himself or herself will be under a highly stressful situation. And at that point in time, unfortunately, our code of ethics had very little, if any, guidance to walk the accountant through the thought process in handling the situation in a way that will lead to a reasonable decision path or a pathway to make the right decision. So the guidance, the framework, the support that our code of ethics could provide was going to be very important in that situation. Next, Kalina.
I'm now going to start taking you through the framework, the approach that's developed in the code. And the starting point are the fundamental principles of integrity and professional behaviour. And to emphasise the importance for all accountants to comply with those fundamental principles. Integrity requires accountants to act properly in relation to the information that they have, not to turn a blind eye or decide to disregard information that is inconvenient, and to act as they would expect others to act if the facts were affecting them. The professional behaviour is a combination of different things, including the expectation that one will act in accordance with one's training and the professional codes, but also that one will have regard to the reputation of the profession and understand that it's inappropriate to take actions which will bring the profession into disrepute. But the simple point from this slide is all accountants are expected at all times to comply with the fundamental principles, and that's the starting point for this particular analysis and framework for behaviour. Ken.
Nothing further to add at this point. Kalina, next.
Now the starting point is that for the actual actions to be taken by accountants is that they should make sure they properly understand the information that's in front of them. They've drawn it together, made sure that there's a coherent explanation of their concern, and then they should talk to management or those charged with governance, that's TCWG, to ensure that they fully understand the issues that have been identified, and to give them the opportunity to disagree with the analysis, to rectify the situation, to take actions, to compensate or put right the problems that have occurred, and generally to address the consequences of the breaches of law and regulation. And I think it's really, really important to appreciate that that is the first action step that needs to be taken. And when deciding who to talk to, it's important to bear in mind that you're talking to people who have responsibility for the area where the problem occurs. That is why the slide refers to management or those charged with governance. If the problem that has been identified occurs in an operating division of a company, there will be leadership responsible for that company, that division, whether it be within the division or in the holding company, and that management team is responsible for considering the information that the accountant refers to him or her, and then deciding on the action to be taken. If it's the problems are encountered at the very senior level of the company, then it's necessary to go to those charged with governance, because they're the people who are overseeing the senior management of the company. The other point to emphasize is that some instances of non-compliance with laws and regulations may be likely to happen in the future. There may be a plan to act in a particular way, a program, a project that's designed to go forward in a particular way, which breaches the law. For example, just as a quick example, if there was an intention to put effluent from a factory into a river, and that was the way that the company proposed to deal with the effluent, that might be in breach of environmental laws and have significant consequences to the local community. And in that situation, although it hadn't happened, it'd be important to talk to the senior management so that they could take steps to correct and stop that wrongdoing occurring. And it's only after all that has taken place that we get into the consideration of the further action to be taken in the public interest. There is one exception to that, which we'll come to later, but as a matter of principle, the important exercise is to talk to the company at the appropriate level, give it an opportunity to address the problem, and only if they don't address it, then to consider what further action should be taken. Ken.
Thank you, Richard. Let me just perhaps emphasize why it's so important to understand the bullet points on this slide. What our board was trying to achieve was not really just focus on the issue of reporting, but really to pull away from reporting and really think about the broader public interest objectives that one needs to think about in whenever one encounters an issue of non-compliance with laws and regulations. And those public interest objectives are laid out on this slide. First of all, to enable management to rectify, remediate, or mitigate the consequences of the NOCLAR, or to deter the commission of the NOCLAR if there is an indication or information that suggests that there is an act of non-compliance that is being planned or that will be committed in the very near future. And these are very important objectives that our board was trying to achieve. And importantly, in thinking about how to achieve those objectives, our board considered the respective roles of auditors and of accountants versus the roles of management and those charged with governance. And our board recognized that indeed management and those charged with governance do have an important role to play. They have importantly responsibilities vis-a-vis their shareholders and the entity's stakeholders, and they needed to fulfill those responsibilities. So our board thought about the broader objectives, the broader roles of management and those charged with governance, and reconcile those two, brought those together in order to achieve this important element or objectives of the framework. And the third point is, it's not enough for the accountant or the auditor to talk to management and those charged with governance, as Richard explained earlier, but in order to achieve those objectives and to have them really fulfill their own responsibilities, but also for the accountant to stand back, having spoken to management and really address the issue with them, which we will walk through in a moment in terms of the process, but for the accountant or the auditor himself or herself to think about what further action would be needed or would be appropriate in order to for the accountant to act in the public interest. And that is a very important principle, that is a very important objective that also features very prominently in the framework, and which links directly to this issue of disclosing the matter to a public authority. Next slide.
Now, I said earlier that this does not apply to all laws, breaches of all laws and regulations. So I think it's quite important just to explain what laws and regulations are within the scope of this particular code. The slide's just coming back. Thank you. The first group of laws and regulations which an accountant should have regard to and to which the code does apply, or breaches of these laws and regulations the code applies, and those are laws and regulations which have a direct effect on the financial statements, either because of the amounts involved or because of the disclosures that are required. So if there is a legal obligation to prepare the financial statements in a given way, or there are laws and regulations that affect the computation of items that are to be included in the financial statements, and those laws and regulations are not being complied with, then the code applies and the accountant should consider his or her position and the steps to be taken in relation to those breaches or potential breaches. The other laws and regulations to which this section of the code applies are those that are fundamental to an entity's business or its operations. I gave an example of environmental requirements, laws and regulations, and if those are being breached with consequential damage to the public interest, then that is an issue that should be disclosed or should be dealt with in accordance with the code. In just a moment, I'm going to show you some slides which cover a range of different laws and regulations which fall within the first two categories on this slide. I think it's really important to emphasize that this is not an area where the distinction is drawn between public interest entities and non-public interest entities. The code applies to accountants irrespective of the company or entity that they're involved with. And it applies irrespective of whether it's a company or whether it's a partnership or some other entity, including charities. So it's an all-embracing requirement of the code. But by the same token, there are areas which are not covered and which the code in this area does not apply. It does not apply to personal misconduct. So the fact that somebody has misbehaved in their personal life is not an area which is caught within the code. Nor is it caught, does it catch what one would describe as inconsequential matters, driving offences, personal failures, or even if they're on business that do not go to the core of the business concerned. And it's quite important that because it highlights the fact that this is directed at the most important types of laws and regulations that go to the heart of the operation of the business. And in the next few slides, we'll give you examples of those types of laws and regulations. Ken.
Thank you, Richard. Just a couple of points to add. First of all, as you painted the scope of laws and regulations that the standard covers, those two categories of laws and regulations are consistent with the categories of laws and regulations that are covered in the auditing standards of IESBA. The particular auditing standard is ISA 250, which many of you will be familiar with. These are the same laws and regulations that are covered under ISA 250. And what this means is basically that auditors should be familiar with the range of laws and regulations they should be aware of in undertaking their audits of financial statements. So those laws and regulations are aligned with ISAs. There is also nothing in the NOCLAR standard that actually increases the range of those laws and regulations that auditors should know about. In other words, this standard is not imposing a requirement or an obligation on auditors to gather a greater understanding of laws and regulations beyond the level of knowledge of laws and regulations they should be equipped with in undertaking their audit. So that's very important. It's aligned with ISAs and it doesn't go beyond in terms of the scope of laws and regulations that are covered. Next slide, please.
Just to add one quick point to the point that Ken's just made, if I may, and that is that this section of the code isn't trying to create a situation where accountants or auditors are acting as civil policemen. We're trying to deal with a situation where they actually become aware of something, not to give them a responsibility to go searching for compliance or non-compliance throughout the entire activities of the entity. I think that's really important to emphasize because it's very easy for people to extrapolate or develop these thinking to give the auditors some responsibility that goes beyond the normal audit activities. This is not the creation of a civil police force. Now, on the slide, and there are two of these, we've indicated some of the laws and regulations that we would expect to be relevant when considering compliance with this section of the code. Bribery and corruption. I think we all know that bribery and corruption are serious matters which go to the heart of the integrity of the company, expose the company to very considerable risk and liability, let alone criminal conduct, being criminal conduct. And so bribery and corruption would be something that would be within the scope of the section. So too is fraud, money laundering, terrorist financing, and if we could go to the next slide. Financial misconduct in relation to products and services that are being sold to third parties. We all know of the problems concerned with investment of financial funds provided by third parties and the egregious cost to society as a result. Environmental protection, which I've mentioned before, and so too, relatedly, public health and safety. Perhaps the one that's a little bit different is tax law. The code, we do not expect the code to apply to each individual, to circumstances where there may or may not be compliance with tax laws themselves, where there's, for example, it is debatable whether or not the particular approach being taken is correct under the relevant tax law. What we're concerned with, and it's important to emphasize this, is systemic tax evasion, circumstances where people are putting in place a structured approach to the investment of funds, for example, in a way which is designed to evade the law, and it is effectively criminal in its content. Ken.
Just one point to add, and perhaps it's an important point that participants should understand, and that is that yes, the range of laws and regulations that the standard covers is very broad. Certainly, there is scope for perhaps misunderstanding, if you will, given that very broad range of laws and regulations covered. And just to give an example by what I mean, do we imply, for example, that an auditor should be fully knowledgeable about environmental laws and regulations? Do we expect all auditors to be fully knowledgeable about laws and regulations governing money laundering? The answer is no. And what the board really intends is for auditors and accountants to really respond to breaches of laws and regulations of which they should know by virtue of their training or by virtue of the engagement to which they have been called upon to apply their specialized skills. So in other words, there has to be a nexus to the scope of understanding of laws and regulations that the auditor holds in order to be able to, for the individual auditor to be able to respond. Certainly the board doesn't expect all auditors to know all laws and regulations that are within the scope of the standard. There has to be a proper understanding on the auditor's part of the laws and regulations that would be expected of the auditor by virtue of his or her training. Again, just to give an example, fraud or even bribery and corruption, those are types of laws and regulations that our board expects auditors to be knowledgeable about, or certainly to be able to recognize non-compliance in those respects because of their training. And there are certain laws and regulations which not all auditors necessarily will be fully knowledgeable. But for example, financial services auditors or auditors who are engaged to audit banks and financial institutions certainly will be expected to be knowledgeable about laws and regulations governing financial institutions. And case in point would be anti-money laundering legislation or even legislation governing terrorist financing. But however, we would not expect all auditors to be entirely familiar or fully familiar with those laws and regulations governing money laundering or terrorist financing. So that's a very important point to understand. The standard is proportionate. It certainly does recognize that auditors serve a variety of clients, a variety of industries, and really, in many cases, auditors will have to specialize in specific industries for which they are engaged to provide those audit services. Next slide, Kalina.
Now, in the rest of the presentation, we're going to distinguish between auditors and non-auditors in the first place, and explain the approach that's taken by auditors. And then we will turn to the position of professional accountants in business and differentiate between those who are senior professional accountants in business and others. I don't think I need to stop on that slide, and would ask to go to the next slide, please. Now, the first thing that an audit, we're now talking about auditors, and the next 4 or 5 slides are all concerned with auditors. Next 8 slides are all concerned with auditors. On becoming aware of actual or suspected NOCLAR, or non-compliance to laws and regulations, the first step the auditor should take is to consider what legal or regulatory obligations are triggered. I cannot emphasize this too much, because you may find that there is already a reporting obligation, certainly in the financial services sector or in relation to money laundering and terrorism. There are existing legal obligations in many countries requiring immediate disclosure of that information. There may also be some provisions in the legislation or the regulation which preclude the auditor discussing the matter with other people, and in particular with people who may be perpetrators of the wrongdoing. And that is what we mean by tipping off. There may be a requirement that one does not put the person on notice of the fact that the suspected breach of law or regulation has been identified. The third category works in the opposite direction. There may be countries, there may be provisions in the laws of countries which absolutely prohibit in all circumstances the disclosure of confidential information. So in order to ensure that the auditor acts properly in accordance with his or her legal or regulatory obligations, it is absolutely critical that the first thing the auditor does is to look at what the legal obligations are under the relevant law or regulation in respect of the issue that's been identified, to see whether or not there's a reporting obligation, to see whether or not there's a prohibition on talking about it to various people, and to establish whether or not there is an absolute prohibition on disclosure of confidential information, and I suppose with that, whether it is confidential information. Ken.
Thank you, Richard. Just a point of information for participants. Just a last comment you made, Richard, about prohibition on disclosing confidential information or breaching confidentiality laws and regulations in a particular jurisdiction. It's important to understand this point of this interaction between confidentiality laws and regulations in a particular jurisdiction and the NOCLAR standard. Certainly, the standard cannot override laws and regulations in any jurisdiction. Laws and regulations take precedence, and the code really is subordinate to those laws and regulations. So what does it mean if there is a prohibition on disclosing confidential information to a public authority in a given jurisdiction. It doesn't mean that the auditor is done with and there is nothing further to be done. Absolutely not. Whilst there is a prohibition on reporting to a public authority, the auditor still has to comply with the rest of the NOCLAR standard. So it's not about reporting only, the standard is about responding. And there is a range of obligations within the standard which the auditor still would have to fulfill in order to meet his or her responsibilities under the ethical requirements. So that's an important point to bear in mind. If there is a prohibition in law or regulation about disclosing information to a public authority, the auditor still has to comply with the rest of the standard. Next slide.
And that's a very helpful introduction to the next slide, because what's on this slide is a very good example of what Ken is referring to when he says that it's still necessary to comply with the other requirements of the code. So the starting point, as I indicated earlier, is to raise the matter with the management or those charged with governance, escalating the matter above the people who have been maybe involved in the wrongdoing. And the thought process behind this is to give those charged with governance and management an opportunity either to validate the worry, the concern that there's been a breach of law or regulation, or to actually demonstrate that the auditor's concerns are unfounded. And secondly, the auditor should be drawing their attention to the potential courses open to management to rectify, to mitigate, to stop, or for the management themselves to report the matter to the relevant authority. And all of those are options open to the management or those charged with governance. And obviously alongside that, as we've indicated from the previous slide, it's very important that the auditor complies with the applicable law or regulation and also with those professional standards, and in particular the fundamental principles of integrity and professional behaviour. Ken.
Just on the latter point, compliance with professional standards, let me just perhaps dwell a little bit on that. As many of you will be aware, auditing standards, for example, the IESBA standards, do deal with issues of non-compliance with laws and regulations, and in particular, the matter of fraud. And there are various responsibilities under auditing standards for auditors whenever they come across suspicions of fraud, to take action to address the issue. So auditors certainly will be expected to fulfill their responsibilities under auditing standards, and in particular to consider also the implications for their auditor's report. However, I'd like to add another point, which is the interaction between the NOCLAR standard and the ISAs themselves. The standard that we're looking at here about NOCLAR in the Code of Ethics doesn't amend or interpret ISAs. It doesn't modify the work effort of the auditor under the ISAs. Whatever auditors are expected and required to do under ISAs remains unchanged. Where this standard comes into play about NOCLAR is to really ask the question of the auditor: are there any implications from a broader public interest perspective regarding this matter of non-compliance with laws and regulations? Are there consequences in terms of substantial harm to the entity, to shareholders, to customers, to creditors, and even to the general public? And that is where the standard comes into play, which is considered the broader ethical / public interest dimension of the issue, rather than just the impact on the financial statements, the impact on the bottom line. Next slide.
Now the next slide concerns the actions that auditors should take if they are if the entity that they're auditing is part of a group. this, I think, can be summarized quite shortly in that the duty or responsibility of the auditor of a subsidiary or associate company within a group is to report the instance, the concern, to the group audit partner, the group engagement partner. That is essential so that the group engagement partner can consider whether that particular problem might apply more broadly to other companies within the group. Similarly, as far as the group engagement partner is concerned, if he becomes or she becomes aware of information related to a suspected non-compliance, then he needs to consider whether to report that fact, that the fact that such a concern has existed to other entities within the group, so that if there are companies doing within the group who are carrying on similar work, have similar products, have similar business activities, then the auditors of those subsidiaries can consider whether or not they have the same problem to address. Again, just to draw the obvious point that if there is a prohibition on disclosure of confidential information under the law of the country concerned, then it may not be possible for either communication to the group engagement partner or by the group engagement partner to take place. Ken.
Thank you, Richard. And maybe just to add to your comments, really the part of the framework, the part of the response framework that deals with communication within a group audit context is really trying to establish a communication line and to raise the visibility of NOCLAR issues at the relevant level within a group, within the group audit team. And really the intent of the board has been to address issues of non-compliance that are pervasive across groups. And we know of many instances, well-publicized cases where really issues of non-compliance have been planned and structured in such a way as to evade detection. Fraud is very well a case in point, where really perpetrators will try to use, for example, special entities, special investment vehicles to channel funds in order to conceal their actions. So this provision in the framework, this element of the framework is intended to ensure that if indeed auditors at a component level or auditors at a group level were to identify information that would suggest that perhaps there is a potential issue of non-compliance, that this issue gets raised or is made visible at the right level within the group audit team, so that the relevant group audit partner is able to consider the implications from his perspective, auditing a component or auditing the group, and thereby enable the issue to be addressed in a way that is appropriate and in the public interest. Next slide, Richard.
So, the auditor has identified the potential, the possibility of actual or suspected non-compliance with laws and regulations. The auditor has looked at the legal position, determined what steps he or she should take as a matter of law, and in the light of that has then considered, has then discussed the issue with the appropriate level of management or those charged with governance. And then those charged with governance management respond to the points raised by the auditor. And the question at this stage is, how should the auditor respond? To what aspects of the response should the auditor attach importance? And on this slide, we've set out the sorts of things that the auditor should consider. Did the company respond quickly and appropriately, having regard to the nature of the matter? Did it put in hand appropriate investigations? Has it taken action in response to anything that it's identified or discovered? And that action might be to rectify the position, to compensate or put right things, or to mitigate the damages going forward. What steps has management taken to ensure this doesn't happen again? And has the company considered whether or not it ought to disclose the actual or suspected breach of law or regulation to an appropriate authority? Other people who ought to know about the situation so that all the necessary interests can be protected. So this is about the integrity, the competence, and the thoroughness with which management address the issue and how they respond to the auditor. And that will lead us in the next slide to determining what action the auditor should take. Ken.
Nothing further. Kalina, next slide.
So having looked at, assessed the way in which management has responded, the auditor says to take a step back and think what options are necessary, what steps are necessary. And I think this test is predicated, this is dictated by how the auditor appreciates the public interest and the impact on the public interest in the particular circumstances. And what he will do, or she will do, is to look at again, the law and regulation to understand how seriously society takes the area of the breach. But much more importantly, I think, we'll look at the pervasiveness of the matter. Does it affect lots of people or lots of products? What's the level of urgency for trying to correct the problem? And what is the evidence that stakeholders, and by stakeholders, I do not just mean investors, I mean all those people who use the products or are affected by the products. To what extent are they likely to suffer, and I think the words are important, substantial harm? Now, these are very subjective matters. They're issues that individuals will have their own individual views about, and that's entirely proper. But we were concerned when we were developing the code to ensure that that subjectivity was tested against, if you like, an objective test. So there was some way in which an auditor could check his or her own thinking. And in that context, we expect the auditor to stand back and consider how a third party, aware of all the facts, would react and what view that third party would take. In other words, the everyday member of society, a right-thinking member of society who's aware of the wrongdoing or alleged wrongdoing, appreciates the information that the auditor has about who will be affected and how those people will be affected, and then what view would that person reach as to the threat to the public interest, the risk to the public interest arising from the breach of the law or regulation. So the determination of the action to be taken involves looking at the nature of the breach of the law or regulation, looking at the seriousness of it, looking at who could be affected, looking at how serious the adverse effect to those people might be, and then how other people uninvolved, standing back, looking at the facts, how they're likely to respond. Ken.
I think we cannot overemphasize this point about standing back, Richard, because our board really was very concerned to make sure that auditors really applied that thought process with a sufficient degree of rigor that would enable them to meet the responsibility to act in the public interest. Really, our board didn't want, as you put it, Richard, for auditors to be very subjective and to be, in a sense, find the easy way out in terms of rationalizing not taking the right steps or taking the right action in the public interest. So this element, within the framework, the third-party test, as we call it, is intended to bring that element of objectivity, which thereby adds a very important degree of rigor to the analysis in order for the auditor to reach the right conclusion and decision. Next slide.
Richard, can you hear us?
Beg your pardon. So what actions could the auditor take once he or she has made the assessment that Ken has just referred to? There are a number of options, but the first, and the one that we are most concerned that people should recognize as an option, is to disclose the wrongdoing, the breach of the law or the regulation to the appropriate authority. Now, please note on the slide that the slide goes on to say, even if not required by law or regulation. This is fundamental. This is a provision of the code that goes beyond the law and existing law or regulation and authorizes the accountant to disclose the facts and matters to someone, to the appropriate authority. The accountant may conclude that that is not the right thing, not necessary, because the effect on the society at large or the stakeholders who are affected by the wrongdoing may not be sufficient to warrant that. And therefore, the next option, or a next option in certain circumstances, is to withdraw from the engagement and the client relationship. Now, this may well be an option. Let me emphasize this too. If the law of the particular country prohibits, as a matter of law, the disclosure of confidential information to third parties, then withdrawal from the engagement and the termination of the client relationship becomes the option open to the accountant in those circumstances. That too is qualified because there are some countries where you cannot withdraw without going through a whole process. But the focus of this particular slide is to encourage and to identify as options for accountants: one, disclosing to an appropriate authority if the facts and matters are so serious, and two, if that option is not available, to withdraw from the engagement. Ken.
Yeah, Richard, and maybe to emphasize perhaps in terms of the courses of action, these are not intended to be comprehensive lists. Really, they are intended to suggest courses of action that perhaps auditors would be expected to consider very seriously in having reached that stage of the process. These actions are not mutually exclusive. In fact, auditors may very well find in some circumstances they can actually take both actions. They can make a disclosure to a public authority and at the same time resign from the client relationship because maybe it's no longer tenable to continue the client relationship. I will also perhaps add that the option of withdrawing from the client relationship doesn't mean that the auditor that doesn't have to fulfill the rest of the auditor's responsibilities under the standard. That action is not a substitute for really complying with the standard. So again, it's trying to address this concern we've heard quite often from the regulatory community about auditors taking the easy way out, which is to simply resign from the client relationship and let the issue fester and carry on unabated. This option of withdrawal, our board intends that it is taken in addition to complying with the rest of the standard. So there won't be any easy way out anymore. Next slide.
This really develops what we've just been saying. The decision of when to disclose to, the decision of whether to disclose to an appropriate authority really depends on the nature and extent of the actual potential harm to the stakeholders along the lines that I indicated earlier. But there will also be factors that are important, such as whether there is in fact an appropriate authority to disclose to. There will be many circumstances when there will not be an obvious authority to disclose to, an authority charged with overseeing or enforcing the particular law or regulation. Because some laws and regulations are of general application and are overseen by the general police or other enforcement agencies. And so it's important just to step back and think about who is the appropriate authority to refer the matter to. And in that context, it's important to think about whether the authority has any ability to react to the disclosure that is made. There are two other factors which an auditor should have regard to, or can have regard to. The first is there a regime, a legal regime in the country that provides legal protection to people who disclose information in the public interest? There are a number of jurisdictions where that protection exists as a matter of law, and of course that is relevant to the thought process that the auditor should go through. And by contrast, there are also places where we are advised there is a potential for the rule of law not to be observed with the rigor that occurs in some countries, and the potential for those adversely affected by disclosure to take their own action, retribution, and put at risk the auditor who makes the disclosure. So the auditor needs to reflect on, first, what is the significance and how serious is the damage that could be caused to particular members of society? Is there an authority that can receive information about the situation and act on it? Is there legal protection to ensure that the auditor is not exposed to claims or prosecution? And then what are the risk of threats, what are the risks to the auditor as a result of having initiated the disclosure? In particular, is he at risk of physical harm as a result of their disclosure? Ken.
Just a further point to add, and maybe the point of emphasis, Richard. It's really important to understand that this matter of disclosure is not about disclosure of any NOCLAR. It is about disclosure of NOCLAR where there is credible evidence of substantial harm to stakeholders. There has to be that sort of basis, that sort of hurdle has to be crossed or cleared. There has to be credible evidence of substantial harm. Again, it's not about disclosure of any NOCLAR. Again, and that's an important point to emphasize, because very often when we go and speak to our stakeholders, we hear a lot of concern about, well, auditors now going to be required or expected to disclose any issue of non-compliance. No, it's not. It's only where there is that basis, that credible evidence, there is reason to believe that stakeholders will be substantially harmed by the non-compliance. Next slide.
Now, the last slide, to do with auditors alone, deals with a situation where an auditor encounters a situation where there is a risk of immediate breach of law with immediate substantial harm to stakeholders. And one of the questions that arose was, if something was about to happen, could the auditor go straight to the authorities, did the auditor still have to go through the process of consulting with management and so forth? And the conclusion was that if there is an expectation or a belief that the breach of law or regulation will happen imminently and will imminently cause substantial harm to stakeholders, then the auditor can go straight to the authorities, the appropriate authority, and disclose it without going through the process of discussing it with management. That's just a simple exception to deal with urgent circumstances. Ken.
Thank you, Richard. Just to add that really the expectation in this circumstance is for the auditor to act in good faith, right? Our board doesn't expect the auditor to simply take that path within the framework to bypass management, as it were, to go directly to the public authority without having carefully thought about the particular facts and circumstances of the situation, and without having a proper basis to really take that shortcut within the process and go directly to the public authority. So that's what we mean by the expectation that the auditor acts in good faith. There has to be a proper basis for doing so. Next slide.
Right, now we turn away from auditors to the position of professional accountants who encounter breaches of law or regulation in the ordinary course of their employment environment. And we've divided, the board divided this situation into two groups. Those who we describe as senior public professional accountants in business, and those who are members of the audit, the accounting functions. Senior professional accountants in business are those who are directors, officers of the company, senior employees who make decisions about the way in which the company operates, how it uses its resources, and basically are senior managers of the business. And in that environment, the expectation is that they will observe laws and regulations. They will therefore set the appropriate tone for the business from the top, and that they will ordinarily have put in place arrangements to ensure that the company, the entity, complies with laws and regulations and avoids non-compliance with those laws and regulations. And that is an expectation that applies across the board to all professional accountants who have senior responsibility within the company or business concerned. Ken.
Nothing to add on this next slide.
The expectation is that the senior accountant will understand and have, in the context of compliance with his professional responsibilities, an understanding of the laws and regulations and will comply with them. That if he discovers something that looks as if it might be wrong, he will raise that matter with his senior person, the person he reports to, or those charged with governance. That his natural and a professional response will be to try to resolve the situation, put right the problems that have existed, and prevent further instances of the non-compliance with laws and regulations. The last bullet here is important. In acting professionally and responsibly, a professional accountant will also consider whether the events that he's become aware of are such that he ought to tell the external auditor about them, so that the external auditor can take the appropriate action when planning audits or in terms of overseeing the final financial statements to determine that they correctly reflect the position. And the determination of whether further action is needed in the public interest, depending on the response of the person he reports to, will depend, as in the case of an auditor, on the facts that have taken place, the exposure that exists, and whether or not the company is responding in a responsible fashion and taking action to prevent or put right the wrongdoing. Ken.
Nothing to add, Richard. Next slide.
Again, in order to ensure that auditors don't adopt a subjective approach, one that basically, sorry, not auditors, professional accountants adopt a subjective approach that avoids uncomfortable discussions with senior people or the necessity to take uncomfortable positions. The accountant is expected to use the third party test and ask himself or herself, how would that third party who knows about these matters react? What action would he or she expect the accountant to take? And the options are different to the options that are available to an auditor. This is quite important. The first, and I think this is really an important one, is to consider informing the parent company or entity about the facts and matters that the person has discovered. In a way, that is going a step beyond the more senior person in management or those charged with governance in relation to the particular company, and going to the company that owns the shareholders, the company that has the shares, holds the shares in the entity, and giving them the opportunity to take control of the situation and decide how to act. In the same way as for an auditor, the accountant still has the option of reporting the events to the appropriate authority in the same way as we discussed before. And instead of the auditor resigning, the professional accountant has the option of resigning from the employment and expressing his unhappiness or her unhappiness with the situation and disassociating themselves by terminating the employment relationship. Ken.
Thank you, Richard. Maybe just a point here about the option about resigning from the employment relationship. Really, we see that as the nuclear option because, as we will recognize, this is going to be very difficult for anybody to take in terms of action. You know, resigning from employment with the entity, because very often that's will cause significant financial consequences for the individual. There might be future career implications for the individual himself or herself. So certainly we do expect the individual to take that action on a very, very well-considered basis, having explored every possible avenue to address the issue. But it is an option that is provided as an ultimate release valve, if you will, in the particular situation. So that is an option that is available, but certainly our board does recognize that it is one that has to be very, very carefully thought through. Next slide.
We now turn to consider the position of professional accountants in public practice, other than auditors, and the options that are open to them. They are, as set out on the slide, to discuss, as always, the situation with the more senior management or those charged with governance, and to take steps to report the matter to the audit engagement partner, the external audit engagement partner, so that the person is aware of the position and can take appropriate action. I think, again, it's important to stand back and consider the public interest to ensure that the proper balanced approach is taken. And as always, as in the previous slides, this will depend on various factors. And one of the things that the accountant needs to bear in mind, as always, is whether there's a prohibition on disclosure to third parties. I'm going to take that quite shortly, Ken, and leave you to add what you wish.
Yeah, just very quickly on this one, Richard. Our board really has thought very carefully about the level of obligation to place on non-auditors who work in public practice. For example, tax advisors, consultants, and so on and so forth. And really, our board has scaled the responsibilities under the standard according to the role of the accountant in public practice. For auditors, certainly there is a greater expectation that they will take action to respond to the issue. For non-auditors, it's a lower level of expectations, if you will, and the requirements in the standards are scaled back accordingly. It's not a determination of further action as for auditors, but here it's a consideration of further action. So it's a lesser requirement, if you will, but still it is a requirement to consider at a minimum whether there is a need for further action. Next slide.
The final category of people to consider are those who are professional accountants in business, but who are not senior professional accountants in business. People who form part of the finance function or have other professional accountants forming other roles within the entity. Now, this I think we can take quite shortly again. There is an expectation that a professional accountant who becomes aware of wrongdoing, breaches of laws or regulations in the way that we've been discussing, will report the matter to his or her superior and arrange for that person to have the opportunity to investigate it and take appropriate action. And the other option available to that person is to use the whistleblowing mechanisms that should, in normal circumstances, be available within the entity to enable people to bring wrongdoing to the attention of senior management. So there are essentially those who are not senior accountants in the entity would have it would be expected that they would escalate the matter, and in absence of escalating it to a more senior person, they will use the whistleblowing mechanisms that will be available. Ken?
Nothing to add. Next slide.
Now, one area that occupied us a great deal was the need for auditors to document their thinking and the steps they've taken. Now, the standard, the code, requires auditors, when they encounter these sorts of circumstances, i.e. actual or suspected breaches of laws or regulations, to document carefully how they've addressed it. That includes how they reported the matter to management and those charged with governance, how management and those charged with governance responded, their assessment of that response and the courses of action that they considered, what decisions or judgments they made in the light of the response of management, and how they then decided to take the matter forward. And above all else, they need to be able to articulate and document the approach they took to the public interest, how they evaluated it, the options they considered, and the steps they took to make sure that they had acted in the public interest. So that's the obligation for auditors. So the expectation is that there will be a clear trail showing the thought process from the moment that the auditor became aware of actual or suspected non-compliance, right through to the determination of the action he or she took or did not take at the conclusion of the process. And just as a comment, that will also include consideration of how the matter should be dealt with in any financial statements. In the case of professional accountants generally, there is not, repeat, not an obligation to document, but there is an encouragement to do so in the interests of the professional accountant so that he or she can demonstrate the steps they took in order to comply with the code. We would regard it as good practice for professional accountants to adopt the same approach to documentation as auditors, but we did not consider it appropriate to make that a requirement in the same way as for auditors. Ken?
Yeah, and perhaps just a point of information for participants. Really, the distinction of between the auditors and non-auditors in terms of the documentation aspect is that really our board has considered and recognized that for auditors, by and large, they will be subject to regulatory oversight, and hence the importance of having documentation in order to be able for them to be able to really establish a basis for them to demonstrate compliance with applicable professional standards. For non-audit auditors, likewise, or correspondingly, they will or conversely, they will not be as subject to regulatory oversight as auditors, and therefore our board has scaled back the level of obligation relative to documentation. So that's an important point of information to take into account. In terms of the encouragement to documentation, non-auditors may well be advised to document even though there is no requirement under the standard for them to document, because documentation can help them if indeed the issue were to be investigated and their actions were to be called into questions. So they may well find that it would be in their best interest to actually document how they have addressed the situation, even if there is no requirement under the standard. Next slide.
Just to add one thing to what Ken just said, I think the other point about documentation is the discipline of documenting the sequence of events does tend to throw up any inconsistencies or deficiencies in the thought process. So it adds a rigor to the process as a whole. Now, we're now towards the conclusion of the presentation, and I just want to summarize some key points. The outcomes we're seeking in the public interest through this part of the code is to have better and increased reporting of things that have gone wrong and need to be addressed, i.e. breaches of laws and regulations. We're trying to stimulate greater accountability by the profession, and we're trying to stimulate greater trust in the profession. And that all taken together should enhance the confidence in the financial reporting environment and the profession generally. Ken.
On the point about accountability, Richard, I would add also accountability on the part of management and those charged with governance. So it's not just about accountability from the profession itself, because management and those charged with governance do have their own responsibilities to fulfill. And this standard is really aiming to ensure that they themselves actually takes the right steps to address the issue. So that is also an important dimension. Next slide.
The standard has inevitably certain limitations, things that it cannot achieve. It can't stop companies, individuals breaching laws and regulations, and no one should expect it to do so. We have not guaranteed, the code does not guarantee that reporting of breaches of laws and regulations will take place. It provides a framework and guidance to accountants, whether auditors or in business, as to how they should approach the situation if they encounter breaches of laws or regulations. But it does not contain a requirement or a guarantee that reporting will take place. Very importantly, this part of the code does not change the nature or scope of an audit. It doesn't change what the auditor should do, how the auditor should approach the audit as a matter of principle. It obviously changes the way the auditor should approach the audit once the non-disclosure has been identified, the breach of law or regulation has been identified, but it doesn't change the approach that auditors should take to audits, the conduct of the audit. Nor does it change the ambit or scope of the audit. The work that the auditor should do in relation to law and regulations is defined in the auditing standards and remains unchanged. This element of the code, this section of the code, is concerned with how the auditor and the accountant react once they have identified through their normal work a breach of law or regulations. And as a result, this is not, as I said earlier, the construction of a civil police force. There is no assurance of detection. The detection arises out of the normal processes of audit or conducting the business of the company. This standard, this part of the code, cannot provide legal protection to accountants or auditors. What it does is clarify the circumstances in which the duty of confidentiality can be overridden in the public interest. That is an ethical principle that is being clarified, and the circumstances in where that ethical principle applies will no longer be expected to be complied with. And lastly, this standard is independent of whatever action the authority to whom disclosure takes place, whatever action they may take, and it can't therefore be an alternative to what the authority chooses to do. The authority, once reported to, will take whatever action it considers appropriate. Ken.
Nothing further. Next slide.
I think it's very important also to realise and take account of one other point. It's very easy in the modern society to view the role of the auditor or the accountant in isolation, to assume that the auditor or accountant is the one party who can or should solve the problems, find the non-compliance, take the action and resolve it. And I don't believe that that is correct. There are a whole collection of other people who have a major responsibility in relation to the conduct of business affairs generally. And They include, as this slide suggests, IFAC member organisations, governments, legislators, regulators, those charged with governance, national standard setters, firms, regional international organisations and academic institutions. All of them have a role to play in helping people understand what's expected of companies and entities, what's expected of people who manage those companies and entities, what's expected of those who set and draft legislation and regulation, those who train and introduce professional qualifications, those who help provide support systems for those auditors and accountants. All of these people have a role to play in helping accountants discharge their responsibilities in these circumstances, and that shouldn't be forgotten. Ken.
Nothing further. Next slide.
Lastly, we recognise that this is a very significant section to introduce to the code. That's why we're undertaking this sort of seminar in order to try and help accountants all around the world understand what is a very different type of provision to one that has been introduced before. And in support of this provision, this section, we put resources on the website. There's a fact sheet which sets out key information in relation to the NOCLAR project and how it operates. There is a basis for conclusions which sets out the reasons why the IESBA made many of the decisions it did in finalising this particular section. So, for example, the basis for conclusions considers some of the arguments or concerns that have been expressed and how they've been dealt with in the section, or why they were not given weight to or followed. There is a video which provides questions and answers and answers to frequently asked questions. There are PowerPoint slides, and there are other supplemental tools and resources that can be relied upon. And all of this is available so that practitioners, whether they be auditors or professional accountants in business, have access to guidance as to how they should respond in the unhappy circumstance that they encounter breaches of laws or regulations. Ken.
Nothing further at this point, Richard. So maybe we pass over to Kalina as we have reached the end of our presentation.
Thank you very much, Ken. Thank you very much, Richard. This was a very interesting presentation, and obviously the framework is bringing a lot of new things for the auditors and the accountants in the business to consider. Just briefly, we have 5 to 7 minutes for Q&A. And I have 2 questions which I would like to pass on to you. The first question relates to, obviously, this is a new requirement, a new framework, and the professional accounting bodies around the world need to help their members to prepare to apply these requirements. So my question to you is, are you aware of any first question is, how ready is the global profession to apply this new standard, in your opinion? And the second is, what can PAOs do as a good practice to bring awareness to their members about the new standard and to help them prepare to apply the new requirements? So over to you, Ken and Richard.
Ken, why don't you answer that question?
Yes, thank you, Richard. How ready is the global profession? I would say at this point, it's a bit of a mixed picture. Certainly, there are a number of jurisdictions that are very well ahead in terms of their adoption efforts. Just to give you some examples, amongst the G20, Canada, the United States in relation to unlisted entities in that jurisdiction, Australia, South Africa, Japan, Brazil. These are some of the major jurisdictions within the G20 that are well ahead in terms of translating the standard, in terms of going through their national due process for the adoption of international standards. and eventually adopting the standard within their national ethical requirements. So they are well on the way. Other jurisdictions we are aware are contemplating or are in the process of initiating the adoption processes. Some jurisdictions do have to go through a certain time lag, if you will, in terms of adopting international standards, whether it's because of resource constraints, whether it's because of the particular way they approach consideration of an international standards. So it's a bit of a mixed picture, but certainly there are a number of major jurisdictions within the G20 that are really very, very serious and very concerned about making sure that these standards gets adopted and implemented at the national level. In terms of what PAOs can do, certainly we encourage, as Richard says, IFAC member organizations to consider whatever implementation support resources we have made available on our website. Certainly they can reach out to us and we will be able to provide them directly with the materials themselves. We encourage the PAOs to certainly speak out to their membership base, to their constituencies, to raise awareness of the standard, to undertake roadshows, to write articles, to issue publications, to really publicize and promote the standard, because it is a very important addition to the literature in support of the public interest. It's a very important part of really reinforcing public trust in the global accountancy profession.
Thank you very much, Ken. The last question, and in the interest of time, because we have to end the session in less than 5 minutes, let me just briefly ask you to summarize any activities that the International Ethics Standards Board of Accountants plans to undertake in the future, which are relevant to small and medium-sized practices. I know that there is some ongoing discussions about this area, and this is relevant to our participants. So if very briefly you can summarize what are these future activities that the board will undertake. Over to you, Ken and Richard.
Richard, I'm happy to take this also. Thank you, Kalina. As you and other participants might be aware, Kalina, our board is in the midst of completing a very important project, which is a restructuring of the entire Code of Ethics. This project actually arose as a result of a lot of feedback we had received from the smaller practitioner community around the world, because the concern was that the Code of Ethics had become so complicated, a set of standards. Over the years, it had accumulated new and revised standards, and it's had become very complex and very difficult to understand. The drafting of the code itself had become difficult to handle and comprehend, particularly for those whose native languages are not English. So our board really decided to restructure the code and redraft it in a way that simplified it, made it more understandable, and certainly more usable. So will, we believe, go a long way toward addressing issues of understandability, issues of implementation, issues of consistency of application, importantly, amongst smaller firms. In addition, our board will be considering, as you raised the question in terms of future steps, what we can do once the restructured code in place in terms of broadening its reach. And we are considering very actively an electronic code, and to build functionality in that electronic code, or e-code as we would call it, that will enable smaller practitioners to pull information that would be relevant for their particular issues or particular circumstances. For example, if they are dealing with an issue of conflict of interest, or if they are dealing with an issue of providing a tax service to a particular client, what ethical considerations should they be aware of? Or indeed, if you're dealing with an ethical dilemma, potentially what requirements would they have to go through or fulfill, and what considerations would they have to take into account? So that's what we're thinking about. It's going to take us a bit of time to pull our thoughts together, but we will await completion of that restructuring of the code, which we expect to be done by end of this year. and then we will see how we move forward in terms of really reaching out and making it as usable as possible. We are also currently launching our strategy review for the next 5-6 years, and we will be considering initiatives in the area of space of implementation. Are there particular actions, initiatives that our board can take, or even at the staff level we can take to provide as much support as we can? On our website already we have released a number of Q&A resources to provide questions and answers or frequently asked questions to clarify aspects of the code. Are there additional areas we can clarify? We would welcome input from the smaller practitioners around the world. We want to hear of needs, priorities, concerns in order for us to be able to respond. So we have not at our board made any firm decision at this point, but we are very well open to considering options and opportunities to provide support to the smaller practitioner community.
Thank you very much, Ken. Let me now close this event with a few closing words. First, let me thank our speakers for the excellent presentation. Let me also thank all of you for your participation in this virtual learning event. Let me use the opportunity to announce the upcoming joint CFRR and IFEC Regional Small and Medium-Sized Practitioners Forum that will take place in Vienna on 31st May this year. We will hear more from the ethics board at this event. As you all realize, ethics is fundamental to professional accountants all around the world, and it's a topic that is very relevant to what we do in our day-to-day life. So we will be looking out to hear more from Ken and from Richard during this SMP forum. In the meantime, invitations will be following to your professional accounting organizations, and please look out at the CFRR upcoming events page for more information about this and other training events. Thank you very much and goodbye.